Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and it's all about Venezuela. So we're going to be opening up the futures with the price action of crude oil. Happy New Year, by the way. And oil it opened up, but has now since reversed and is now down 1.12%. We were down as far as 1.4%. I think this is a knee-jerk reaction and the wrong reaction. And I'll tell you why in a moment. And the negative impact, or I should say the bullish impact for oil, is going to be felt sooner rather than later. Why? You have a couple of things going on here. One is that you had Venezuela, which has not really been producing the maximum that it has been able to produce for well over a decade now. Their infrastructure is very much deteriorated. They nationalized the oil industry many, many years ago. We'll talk about the winners who had investments in Venezuela, and they haven't been able to pump as much as they want. Now, you're going to see a short-term impact. I'm watching this out of real crazy curiosity. A short-term impact on the shadow fleet. Remember, we've been blocking tankers coming out of Venezuela for the past several weeks. They've been going to Russia. They've been going over to China. They've been going Cuba, anywhere they need to go without much of a challenge, especially during the Biden administration, and they got away with murder. So that supply is going to come offline now very, very quickly. Now, it's going to take a while for the infrastructure of Venezuela to rebuild, at least a year or so. So I don't think that the events that have unfolded are as bearish for oil as one might think. And you're seeing a real tug of war here between bulls and bears. Obviously, they try to paint the tape at the open here with a strong open. And the bulls at the open are now getting punished. But we've leveled out here, volatility simmering down. So what does this mean for the overall market? Well, we need to put things into context. And the context is that oil has been beaten up for quite some time. We're pretty much at the lows of multi-year trading range on oil. And it has not been contributing to inflation. It's been, if anything, helping keep inflation at bay, because remember, oil products, derivatives go into everything, whether it be tires, whether it be asphalt, roofing materials, whatever, medicines. They have a major impact on the economy. And where oil higher, you can only imagine what would happen to inflation. So a lot of volatility here in the early goings on oil. We are holding a support level. You can see I have it here. And the one thing that I want to point out about oil was that it broke out last week. Just barely. And now we're doing a check back. So, where it's not so volatile, I would send down an order right now to buy a couple of long-term contracts. I would not short oil here. I think that's crazy talk. But there are going to be winners on the energy front. And geopolitically, there are some real serious losers with what has transpired here, which is truly an incredible feat that what we pulled off here. So my hat's off to our military. Let's say hello to folks. All right, who do we have? Mr. Sean, welcome. Franklin and Bob and crew. Bob wins with the overthrow of Venezuela with a penthouse on the beach. You got it. You got it. Lee Cable, evening to you. It's all good. Good to have you back, pal. OG1 Kenobi, haven't heard from you in a while. Happy New Year. Lizer, welcome. Tim, Bob, I have two questions. Are you afraid that LYBD's high debt will cause them to lower their dividend? You always have to be concerned about that, I think. But their earnings did improve last quarter. And I think that if they were to cut that dividend, in all probability, it would send the shares down lower. Well, right now on LYB, you have people that are buying the stock like we've been doing that are factoring in the dividend as being their reason why they're going to hold the stock. So the stock right now is in strong hands rather than in weak hands. We've been seeing that through the price action over the past several weeks. We haven't been putting in new weekly lower lows, and last week we broke out. That being said, you know, we plan, God smiles, as my friend Richie would say, and I can't rule it out that they might do that, but that's investing, that's trading. So fingers crossed, no. But I still like to set up. We have a pretty big short squeeze potential there. Broke out technically. Last quarter's earnings were better than prior quarters. So that's my take. Sticking with it. Secondly, is it too late to buy FLNG? No, it is not too late. And as a matter of fact, I'm glad you brought that up. I talked about it on the week ahead commentary that FLNG, while we were down, we closed down, or is it we're down December, we're down so far in the month, or either way, down 2 months on the monthly chart. And it may be December, January. And what it looks to me is that we have a very bullish consolidation and we're getting ready for a continuation breakout. Because remember, the reason why we bought FLNG, it was sporting about a 12.75% yield when we bought it, and we put on a pretty big position. And the dividends, since we put it on, now added on 10% more shares from when we bought them. I haven't bought an additional share in, I don't know, a year. But yet we have our share count is up 10% because of the dividend. We're reinvesting the dividends. So it's part of the 7% dividend club. And I'll go over that chart in a while. I just wrote it down. So I'll go over it in a little bit. George, happy New Year, my friend. Eric, good evening to you. Talon, welcome. Polish Taco, hello to you. The lovely Jody, welcome. Lee Cable, I'm hearing rumors that the U.S. has already removed the silver held in reserve in Venezuela. Can't rule it out. We'll talk about the whys about this event in a moment, but you know, I don't want to do a buzzkill here, but there's one big major loser in all this, and one that I'm happy is getting their just desserts. And I'll go over that in a little while. So let's stick with oil. Oil is still weak here. There's no reversal bar. We're into the second 5-minute candlestick. They're trying to hold, what is this? 56.89 the barrel. Big volume. Big volume for Sunday night. Let's check in with natural gas. Natural gas down 2%. And it's staying down. Okay, that is energy. I want to go to the precious metals because we'll start off with silver. Silver up here 2.44%. So the markets, to your question, Lee, are not pricing in any additional silver on the markets. So it doesn't appear that way. Now, it doesn't mean that we take the silver and then just sell it on the open market. And this is a strong chart here. They gapped it up, higher low. Looks like we're going to break out to higher highs. Gold looking strong here at the open. I'm going to caution, be careful with gold and silver because in particular, the gold mining stocks and the silver mining stocks, just be careful for the next couple of days. Don't let them lure you in right now because, Venezuela is such a mineral-rich country. What else we want to take a look at here? I guess we should go to, let's stick with the metals first. Platinum, I should say. Platinum up 2.15%. Palladium up 1%. I'm going to go to a 15-minute chart. I want to see the resilience of the open here. Pretty good resilience on palladium. I don't think live cattle is open yet. No. Let's go to the equity market. All right, equities are opening up. This is the NQ, the Nasdaq 100, opening up 0.15%. Now, there's an argument to be made that what we're about to see is some sector rotation into energy stocks. And I buy into that. Not into all energy stocks, though. I'm thinking more about I'm not going to get ahead of myself. I have some names I'm going to go over. I have a couple of preferred names. I spent a lot of the weekend thinking about who benefits from this event over in Venezuela, and I'll hold off on it. But NQ up 0.15% off the highs of the session. Let's go to ES. It's the S&P 500. They gapped it up, and it is since reversed. Again, this is a 15-minute chart. Now, what I want to mention to folks is that on Thursday night, right before I went to bed, I checked in with the futures, and I know I screwed that up. I can't blame that on Thinkorswim. I went to bed, and the Nasdaq futures were up 0.07%. By the end of business, they were down on the day. So what I interpret that price action to be is the painting of the tape, trying to lure the amateur money into the market so that the institutional money could sell into it. This is why I always warn, do not chase a painted tape. I don't care whether the stock market is red in the morning. You don't go shorting into that gap lower. If they gap it up, don't go chasing that gap. Be careful. And that's what they do during market tops and market bottoms, to be fair. Let's go back to NQ for a moment. Set up some alerts. Now, the argument can be made here that the fact that oil is moving lower is going to keep inflation at bay. That's a fair point. And that should allow for equities, the Mag 7 names, to continue up higher. We can't deny that's a possibility. But I will remind you that oil has already been in a bear market. It remains, excuse me, remains in a bear market. I'm losing my voice already. It looks like the Nasdaq's about to test session highs. So how do we know whether or not the decline in oil prices is going to be bullish for the Nasdaq names, the Q names, Mag 7 names? You need to take a look at really a couple of charts, one of which is open right now, and that is the 10-year yield. And the 10-year yield is not saying right now with this open that, wow, oil's dropping like a rock, therefore yields need to come down. If yields were dropping right now in anticipation of oil prices staying down and dropping inflation, then you would see the Qs up, probably gapping up and staying up in anticipation of a rally. Maybe this all reverses by tomorrow morning. But in the early goings here, it doesn't look like that's the way it's panning out. Although we just went negative on yields. So we were up 0.24%, and the second 15-minute bar, they gapped us down. So this is all thin volume on the bond market. Let's go back to the NQ, see if it's responding to the reversal on yields. Not yet. You have very tight Bollinger Bands here in orange. So this is going to break in one direction or the other very, very hard. RTY small caps. Now, the small caps are by far more sensitive to interest rates. Lower interest rates benefit the small caps more than any other sector, and they're flat. Mid caps, they're down. So the early read here on very, very light volume, and the institutions aren't going to start trading until 4 p.m. in the morning. Asia's going to open up, and then you're going to have a whole ton of volume overnight. So we're not going to know really the outcome of the events of the weekend probably until the markets open tomorrow morning. But again, I would warn, whatever direction they're going to take the market, up, down, sideways, be careful. Wait till see how we close out the day tomorrow. For all you know, oil is going to close up tomorrow. If oil closes up tomorrow on this news, remember, oil broke out last week. It is already on a weekly time frame. It is already and members, you know I always talk about this. It has already pulled back, retested the breakout point. I'm going to tell you right now, I'm going to make the call. I think oil is going up. I think it's going to go up. Because the shadow fleet's already baked in. So we'll wait. We'll see if we get a reversal on oil, and probably using a weekly time frame. And on Thursday night with members, I'll go over the weekly charts. I'm getting back to that with members. Thursday night, we'll be going over the weekly charts to see how we're closing out the week, and we'll take a particular look at oil. If we close up on the week, we'll probably be looking to put on a long bet on oil, because it appears as though it is done going down on a weekly time frame. And if we close up, that's a major, major tell. It has every reason to go down and it didn't. That means that the path of least resistance is no longer to the downside. It's probably sideways, neutral, with a building bias to the upside over time. Additional comments? Hi, Bob, everyone. TZ Burton, welcome. Yeah, it's already a crazy year, right? Good point. Only 4 days in. I think the U.S. will probably hold the silver rather than sell, as there was. Well, I want to comment on this, Lee, but I can't get ahead of myself. You're front running my show. How dare you? You're intelligent. Your perception is there. I can tell you that right now. There's a reason. There are so many reasons why what happened this weekend happened. The least of which is oil. The least of which. Correct. Very much so. Uncertainty is back, in my opinion. We're going to go to, hey, Talon, we're going to go to VIX in a second. TF Hatter, chat. Oh, yeah. Do me a favor, like, subscribe. You know the deal. TF Hatter keeps us algo friendly on YouTube. So like, subscribe. I appreciate that, TF Hatter. I always forget. So thank you for that. Oh no, I'm no master. Believe me. No, you're into. It's all about intuition. Your intuition's spot on. So no, I'm no master. Okay. So speaking about oil is basing its support. Yeah, buyers coming in now. A lot of buyers. 15-minute time frame. This lower indicator here gives you a indication of the buy sell pressure, and it looks as though those that panicked at the open, they may be done. So it's way too early. I would want to buy here, but only if we broke out. And I don't know how the Asian markets are going to open, but I think that we're done going down on oil, despite Venezuela. Okay, let's move on. Let's take a look at the VIX. Now they're crashing not crashing volatility. It's hyper. Well, they are crashing volatility. Volatility is down 15.97%. This is the front month January contract. I don't think this holds. This contract has been extremely weak. The VIX index has been up, was up last week. This, or at least on Friday, this was down. See this? That's 1.5 today. This is last Friday. Well, the S&P 500 was technically up 0.18%. Qs were down. So I'm biased because I watch the Qs more than I watch the S&P 500. But the VIX has been extremely weak. The front month contract, not so much the index. Let's go to the 4-hour chart here. We're right at the lows of, actually, we're below them now. The lows of, what date was this? 12/12, when we had that rip. Okay. Let's check in with currencies. See what the dollar is doing. Dollar up here. Dollar had a good week. It broke out last week. Let's see how the euro and yen trade are doing. Euro down. They gapped it down. Here's the weekly view. Euro was down last week. Yen was down last week. Looks like we're gapping up here at the open. Let's check back in with, I'm not going to, we just had NQ, which just broke out to new session higher highs. Now up 0.29%. Create an alert if it breaks out above resistance. Natural gas now down 5.22%. Let's check back in with oil. Oil now down only 0.35%. Remember, this was down 1.4% earlier, and it opened up. They reversed it to close, not close. They reversed it to go lower, 1.4% lower. Now we have an inside 15-minute bar. I'm standing by. I think oil's done going down. Crypto. Help if I spelt it right. XRP. Very strong weekend this weekend. Opening up over 5%. Bitcoin. Gapping up 2%. So crypto getting the love tonight. And it's been beaten up really, really bad. But I'll tell you, XRP looks really, really good here. All right. Let's go to... Oh, I wanted to talk about... I did a video yesterday on some top stock picks. I'm trying to get these videos going out again. I have been so wrapped up with the new website that I haven't been able to do it, but I'm getting back to it. We're nearly done with the website, and I put out this commentary yesterday. Okay, folks, it's the best stock charts for the new trading week. These are more longer-term plays. They're not short-term swing trades, but take a look at it. As a matter of fact, I'll copy and paste it. Take a look at it at your leisure. And I'll do a quick walkthrough of the new website. And here you have it. This is going to be the new website. This is pretty much locked in now. Our partnership with TrendSpider is a lot greater than what it has been. All membership levels will have TrendSpider included. They're no longer going to be 14-day free trial offers. And we're trying to stray away. We're trying to, how do I put this? We're trying to differentiate ourselves from trade alert services. I don't want to be mixed in with day traders or some of my more nefarious so-called competitors. I don't want to be in that group. So how do we differentiate ourselves? And that question haunted me. I started this in business in 2005. Think about that. So 20 years. And that's a long time in this business. And I'm not talking about trading. The trading I've been doing for over 26 years. The Contrarian trader started in 2005. So there's a couple of things that I honed in on because I talk to my members, I get feedback, I have polled my members, and I listen. That's the key, is listening. So the takeaway that I've learned over the years is that most traders don't trade with a plan. They trade with emotion, they overtrade, and I have this here twice for a reason: oversizing, positioning, not understanding if you're too big in a position. Whereas we want to have more of a structured system. That's us. Not, I won't name names here, but I'm sure you can pick out a few of them out there that they don't talk about a plan. They expect you to go off of an email. They don't talk about it at night on Market Wrap, anything like that. You have a plan, discipline, sizing. And the problem that I've always had over the years is, how do you communicate sizing? Right? I can't put out, I just bought 500 shares of Apple. Why? Because somebody that doesn't have the size of account that I do, that may be oversized for them. I can't do that to people. So I don't let people know the size of my trades, because it can hurt people that don't know exactly what they're doing. So I developed this meter, and this is from feedback from members, the conviction meter. And that is, what if you're a new member, you just signed up, what phase are you at? Are you in launch mode? Are you anchored, meaning you're happy in your spot, you're holding your position, not looking to add right now, maybe on a pullback? Or are you reducing, harvesting your position? That'll be shown there. So you sign up, you could see right away. Or if you don't sign in for a couple of weeks, you went on vacation, or you come back in, you could see automatically, okay, this is where they're at. And what type of a trade is it? Is it a swing trade? Is it an investment? Is it a 7% dividend club trade? Is it an extreme trade, meaning RSI below 15 or RSI above 85? Are you looking to short it? Are you looking to buy it at extremes? And the way I determined how I was going to communicate size rather than sharing the number of shares is, where am I at? If I'm going to buy 1,000 shares of a stock, well, this 75% or 75 here, that implies I have 750 shares. 75%. We're working off a percentage basis. I developed it. It's actually trademarked now. Nobody else has this. So, long story short, will be launched probably within the next 2 weeks. We still have the 14-day free trial offer. That's going on. I would strongly suggest locking your price now, because prices are going up, not on new members, but after we launch, it'll be different pricing tier. So head on over, get your subscription, lock in your price now. Titanium will change. That doesn't have TrendSpider right now, but silver and gold do have it. And if you sign up for titanium, it's not like I'm not going to have carry over. It's still going to be there. But a lot's going on here, a lot. So, yeah, so we're going back to Slack. TrendSpider, all levels are going to come with TrendSpider. So a lot going on, very proud of it. And this will be published in the members area. This is actually the free area if you're just stopping by. These are the stocks we like for the new trading week. I talked about them on that video. Check it out later on. And that's it. And let's get to it. Let's talk about economic data coming out this week. January 5, ISM manufacturing survey, important. It's a jobs week. On Wednesday, we get ADP employment report, ISM services. So we get manufacturing on Monday. Wednesday, we get services and the ADP report. ADP is expecting a rise of 45,000 jobs versus a loss of 32,000 last month. Thursday, consumer credit, productivity is important. Nobody cares about trade deficit anymore. When I first started trading, this was a very, very important number. Very, very, nobody cares. Nobody cares. Deficits be damned. Friday, U.S. unemployment report. This is the non-farm payrolls. This is the pimp Mac Daddy of all economic data coming out this week. UMich Consumer Sentiment Survey. So a lot of heavy reports coming out this week. In a couple of weeks, it's going to be earnings season. So economic data is going to take a back seat. But right now, economic data is still very, very important. In terms of valuations, the Schiller PE ratio, 40.30. So still quite expensive into 2026. The Buffett indicator, I mean, we're at all-time highs. All-time highs on the Buffett indicator. We have blown past 2000. 2000 is back here. We tapped the 2 standard deviation move back then. 2020 and 2021, we went through the 2 standard deviation and failed. 2020, was it 2022? We had the bear market going into 2023. We pierced, fell back. We're just like ridiculously overbought levels right now on valuation. So I would be very, very careful with listening to the talking heads on CNBC talking about, hey, listen, this is going to the Venezuela thing is going to put the kibosh on inflation. Energy prices are going to drop like a rock. Be careful. They're trying to drop yields to drive up equity prices. I don't think it's going to happen. Fed Watch. Okay. So one would think that if energy prices were going to crush inflation, that you would expect rate cuts sooner rather than later. Let's do a refresh. No change. No expectation of a rate cut in January, March. Coin flip. April, still a coin flip. All right, so now we're going to go into Venezuela and a little bit of history here. Venezuela, I've been to Venezuela. I've been to Caracas, and the architecture was simply beautiful, a really beautiful place. People were nice, very poor. I came in off of a cruise ship, so coming in from the harbor, coming up the mountains. This is back in the 90s, 1992. And tin shacks all across the mountains. So honestly, the first thing I thought about when I saw the images of bombs going off, I was worried about the people in the tin shacks on those mountains. So you could tell that it was once a wealthy, wealthy nation. And now you can see that the GDP per capita has just been completely decimated over the years, with Poland, which post-World War II was well below that of Venezuela, has now ripped through by far Venezuela. And Venezuela is one of the most mineral-rich regions in the world. And it all comes down to corruption. Simple as that. So why did we do what we did? Is it all about oil? No. We have enough oil. We have good enough oil. Do we want control of more oil? Of course we do. But if you look here, this is a chart of Venezuela. You have the Chinese that are trying to build bases, or were trying to build bases inside Venezuela. Their goal was to get intermediate range missiles into Venezuela. They can't do it in Cuba. That's too close, and they know that wouldn't end well. But Venezuela, different story. So if they have intermediate range missiles, they can hit the Panama Canal. They can hit Texas. Right here is 40% of our oil generating capacity in the United States. So if they were able to knock out the Panama Canal and take out our oil production using intermediate range missiles out of Venezuela, that would hurt pretty damn bad. We would have to go down the Straits of Magellan to get into the Pacific with our Atlantic fleet to go if they wanted to attack Taiwan. So that's done now. That's gone. That threat has been eliminated. That's the big one. So as I was mentioning earlier, who is the big loser here? By far is China. Because here, you'll remember a couple of weeks ago that the Chinese began, well, they've been doing it for a number of years, threats of not exporting rare earth minerals. And most recently, the week before last, they put limitations on the export of silver. China is the biggest producer of silver. But the problem for them is that Venezuela has a massive, massive amount of rare earth minerals. So oil in comparison to the rare earth minerals and the fact that you could have Chinese intermediate range missiles aimed at the United States makes oil look like a back burner story. So we don't want to get lost on the oil story here. We want to talk about the national security threat and the fact that now we have access to rare earth minerals, which China tried to put a dagger in us, and we just said, go F yourself. And I'm not going to spend too much time on here because people get upset when they talk about politics. But just as a reminder, let me play this.
Initiated by a court order, the Michigan investigation team obtained forensic access to a DS200 tabulator, the machine that counts the votes. A Telit 4G wireless chip manufactured in Taiwan was discovered embedded into the motherboard. The voting machine tapes clearly indicate modem engagement and transmission of election data. Some of the anomalies that we noticed in the 2020 general elections, that 5 key states all stopped counting at a certain time in these key battleground states. These were all where the software, Dominion machines, ES&S machines were used, the Smartmatic, the GEMS software. So when the vote stopped counting, and this has been noted in other countries as well, President Trump was significantly ahead. When reporting and counting resumed, there was a massive spike occurred that favored Joe Biden.
Okay, so here, Venezuela communist dictator Nicolas Maduro got away with overthrowing the Venezuela government using Dominion Smartmatic rigging systems. Exit polls showed him losing by 35 points. So the exit polls had him losing by 35 points, yet he won through supposedly manipulated data through the Dominion Smartmatic machine. I don't know that is fact. I don't want to get sued, but that's the real reason. President Trump wants China out. He wants to reduce their threat to us, and he wants part of his legacy to be he won that election. We're not going to go any further than that because people get upset, and I don't want to talk about it anymore. We're moving on. So let's talk about who benefits here. And I have a favorite. So 7 stocks that could win bigly from U.S.-friendly Venezuela. ConocoPhillips. That's one of them. It's not my favorite, though. ConocoPhillips, their assets were seized. ExxonMobil. ExxonMobil is going to win out of this, but their stock is already all-time highs. Chevron is like the only company that has remained in Venezuela. So they already have a footprint there. So we're looking for value right now. Who gets the most value out of this? I don't think it's Chevron. They're already there. Williams Company could be. I haven't looked into this one. The one, though, that I like the most is even on this list. Yeah, it is. Hold on one second. Schlumberger and Halliburton is probably a toss-up there. Unlike the oil producers like Exxon, who had assets seized, the service companies stayed to work for state oil company. So they need to rebuild all the infrastructure. Who's going to win? Halliburton, Schlumberger. These are the two I like the most. And we're going to talk about Halliburton and Schlumberger in a moment, how they look on the chart, and everything else I really don't care about. Airlines, I don't invest in airlines. Last reminder, the futures are not showing this, but reverse repos last week, somebody out there blew up. I think from my research, it concluded that it was Deutsche Bank, and there was a short squeeze event. Deutsche Bank looks like it got the short end of the stick, whereas JP Morgan and Citibank came out the victors. So let's talk about the charts. Franklin, I did read this. I did read it. And I'm not as hot on it because I did more research on Diageo, and their yield is really not, from what I understand, not a true yield. It's an ADR yield. Their yield is actually lower than what it is shown on the software, like stockcharts.com. It's actually lower because it's an ADR. So, and I think you have it here as well. So I'm not as keen on it. It's got to go down into the low to mid 70s now for me to be interested in it. Much lower than where it is right now. So we may not get it. So thanks for sharing this. I did look into it. Okay, let's talk about all comments. We got UAMY, Trin, Atom, Tesla, EPAL. Okay. All right, let's begin. FLNG. I was asked earlier, is it too late to buy? No, it is not. So, yeah, I was right about the monthly chart. We had two back-to-back months of downside price action. However, I still like the setup here. Why? I think that we are bull flagging out. And we're getting ready for a continuation breakout on a monthly time frame on FLNG. Remember, we broke out back here and it was off to the races. So I think we still have a lot more upside potential here technically on FLNG. We own it. It is part of the 7% dividend club. And that is right here. So it remains part of the portfolio, and it gets bigger in terms of position size with every quarter because it throws us off 12.75% on our original investment per annum. So I still like it. I think you could still buy it. HAL, Halliburton, was in a big bear market till September. Oddly enough, when did we start saber rattling in with Venezuela? When did the CIA go into Venezuela? In September. I'm sure it's just a coincidence. We have broken out on Halliburton, continuation breakout. This stock's going up. Let's take a look at it on a quarterly time frame. The good news is that even if they gap it up tomorrow, it's got a lot more upside to go here. So Halliburton, bullish on any pullbacks to be bought. SLB. SLB looking good here. Let's throw up the automated trend lines. We have a nice consolidation at 33.95. We hit a 40 handle last week. I think this is going up. I would like to see a shakeout on both Halliburton and SLB, at least a pullback and a retest of support levels, at least once. And it may not seem like that's going to happen because of the news. They'll probably gap them up tomorrow. Don't chase it. Just watch it. It'll fade. People will forget, and they'll drop back down. They'll do their retest. So I still like these names longer term. They're well off their highs. UAMY. Let's go to the monthly chart. You know, it's still early in the month, so I can't call this a win yet. We're currently above a support level. Let's go to the weekly chart. I think what we could do here is just do this. You have resistance above at, let's go to an extreme. $7.14. You get to close above that mark. I would be a buyer. It stopped going down. So it looks like it's firming up pretty nicely here. So UAMY looking pretty good. Bob, would you buy a Venezuela ETF? I don't see why not. I don't see why not. If you believe that, and it's a good question because, you know, what's our thesis, right? We're carrying a short position right now on the Qs, and the expectation is that there's overvaluation. It's frothy. There's no rate cuts in sight for the next several months until May. But what's going to happen when those rate cuts come? And what happens when they start quantitative easing again? Well, you're going to have inflation that's going to have liftoff. So what does well? Emerging markets do well. Any country that has commodities does very, very well. So I would argue that, yes, no doubt about it, Venezuela, that would be a long-term play that should be bought. You know, it's great research that we need to do, and I'll present it during market wrap tomorrow. We'll talk about it. So absolutely, I agree, 1,000%. I think the number one question is we want to make sure that either A, we're in charge right now, and or B, they have a structure in place where we can we can monitor the current government to ensure that they have free and honest elections and they remain a democracy. So dollar cost averaging like anything else. So back to UAMY, let's go to the daily chart here. We recaptured the support level on Friday. That was a down day for the market. But let's face it, this is a sub $10 stock. So we need to keep that in mind. So I'm growing bullish on UAMY. I like the monthly breakout. the weekly chart, if going back to that weekly chart for a moment, we had a breakout the week before last. Last week of check back. That's bullish. That's good stuff. So watch for a breakout here. I'm bullish. I would nibble here, add more on a close above 7.14. And if on the monthly time frame we close above this mark, that's really bullish stuff. You're starting to see a breakout of this downtrend channel and back into a higher low. Basically, what has happened here is that you have a secular bull market, but you had a secular bear market, a cyclical bear market. So we're leaving that, or potentially leaving that cyclical bear market and resuming the secular bull market. TRIN, Trinity Capital. Didn't we talk about this one? Wasn't this a dividend play? Yeah, 13.5%. This is on our 7% dividend club list. So this is firming up. Let's take the trend lines off. We just had an alert that fired off. We'll come back to trend in a moment. What was that alert? Oil just broke out. Oil just broke out above resistance. I don't think it's time to buy yet. I'm not saying that. I'm just saying that if they close out tomorrow up on the day, bullish. All right, back to trend. Let's go monthly view. We're still above resistance. I think what we need to do is set up an alert. Put an alert here. Breakthrough. Why is that sensitivity still there? Down. All right, so our alert is set. Weekly view. Not bad price action last week, and some of you out there may be saying, you know, what the heck is he talking about? Closed down on the week last week. All down weeks are not made equal, right? All down weeks are not made equal. We dropped all the way down to 14.45. Yet we managed to form a nice bottoming tail here on TRIN. We couldn't close above resistance, but I think what we could do here is say, okay, here's our higher low. What we're looking for is a breakout out of this wedge formation, and then it's a buy. So this is a financial. It's one that we're going to look to add to our 7% dividend club. The goal of that club is to average 7%. So this is yielding 13.5%. FLNG 12.75% when we bought it. So we can afford to buy a few stocks that are beaten up, that are yielding 5% and still stay above that 7% average. You're welcome, Tim. And that's okay. We're worried more about we're worried more about, is our setup right? Are we buying right? And if we're buying right, then we'll worry about the next ex-dividend date. We'll have a position. I'm not too worried about that per se. So the goal is to enter right. And it looks as though we're at that point where things are starting to firm up here. I'm not ready to pull the trigger yet, but very, very close. And we'll send out an alert when we do pull the trigger on it. All right. The next chart up, ATOM. So the first thing that jumps out at me is that it was up on a down week, at least for the small caps. RSI, higher lows, no breakout yet. Price, higher lows. Daily view. We broke out on Friday. Watch for a check back here, 2.23. You could scratch the itch. Buy a few of your shares. Don't get too heavy. Stop loss right below 209 per share. Add more on a follow through above the highs of Friday, which was 2.38. So firming up, looking bullish here. You're welcome, Sean. Tesla. When I was in England in May, I took an Uber and I got into this car and I was talking to the driver. And I didn't know whether there was a different version of Tesla over there or what. I said, what kind of car is this? It's really nice. And it was a Chinese vehicle, DKY, something like that. It's slipping my mind. But the Chinese EV maker that this car was, and this car was, he told me he priced out a Tesla, and this car was about half the price of a Tesla. This car was gorgeous. I'm talking gorgeous car. And the guy got a sweet deal on it. So they're the number one EV maker now, eclipsing Tesla. So to the chart of Tesla, Tesla's come under a lot of pressure of late. This is the monthly chart. At current, we're down below support, but the month is not over. Let's take a look at the weekly chart. We broke weekly support last week. Volume was light, but on the daily chart last week, it got beat up pretty bad, as did the rest of the Mag 7 names. So, most of the Mag 7 names. NVIDIA was up on Friday about a percentage point, and we were down on volume. Miser, take care, pal. And I'm not a buyer here. I wouldn't short it, but I'm not a buyer of Tesla. Lower highs, lower lows. I'm not a buyer here. So I would avoid this right now. Last one up is EPOL, E-P-O-L. Hopefully I wrote that down right. Oh, this is interesting. Bullish. Apparently, I looked at this one time before. Path of least resistance is up. Can't argue it. This is an ETF putting you long of Poland. Bullish. Looks good. Let's go to the weekly chart. Beautiful. We consolidated. Last week we had follow through, bullish, just buy the damn thing. Dollar cost average looks really, really good. And that's it, folks. Have a profitable trading week. Thanks for being here, and I will talk to you soon. Have a great night.